And with me today, my co-host, Nick Kosko. Nick,
Hey,
well,
thanks for having me. Looking forward to getting back to the basics and digging into some of the noise that we hear in the world, right?
absolutely. It's funny because the more that you start communicating about freedom, financial freedom, infinite banking, taking control, you start talking to people about this, and you do it so much that these basic things seem like they're too basic, like, right? And every time that we go back and we talk about the basics, we have clients that yesterday had a client that's been a client of ours for 10 years say, man, when you guys went through how a bank works and that they're making 2,600% more than me with my money from me,
Right.
like that just hit me. And I thought, man, how many times would I have thought that they had heard that or saw that? And maybe they had, but Nick, it just hits people sometimes. And maybe it's the 10th time you hear it, right?
Sure. We met with a guy yesterday. Um, he's been dabbling in infinite banking. Someone else tried to teach him, and I just said, "Hey, I just want to be respectful to everyone here, and I just want to make sure we're all level set, right, on the same page."
Yeah.
And I asked him if he'd read Nelson's book, and he said, "Yeah, I've listened to it." And I said, "Hey, so what's the big problem that we solve in that?" And he's like, and he explained to me IBC, the process of the bank. And I said, well, let's talk about the problem that it solves. And that is that we finance everything that we buy.
Yeah.
And I went on to explain it. And I said, hey, listen, there's a lot of distractors out there. There's a lot of noise, right? And we have to understand what's going on in that noise so we can turn off the noise. And one of those things that we hear a lot, people hear about, is this rate issue, right?
Yeah.
Interest rates, right? And what did Nelson talk about? He talked about volume. It's about the volume of interest in every payment that matters, not the rate.
Yeah. So, back to what you said is when we would, if you look at our courses and you look at the course that's titled The Secrets of Money, Part One, right? And you talk about you finance everything, you either pay interest or you give to someone else, or you give up interest you could have earned somewhere else. There are no exceptions. That's the quote from Nelson.
Yeah.
But like, you got to let that sink in, because that can go in one ear and right out the other ear, or right over the top of your head. And the way that you get to understand that is this discussion of lost opportunity cost, but we got to understand the interest first, just the basic thing. And financial institutions, they want us to focus on interest rates. It's the distractor, as you like to say a lot, right? It's the amount of interest, though, that's paid in each payment over the lifetime that matters for the lifetime of the loan that matters, right? So let me say that again, since I did it so eloquently the first time. Financial institutions want us to focus on interest rates, but it's the amount of interest paid in each payment over the lifetime of the loan that matters. And we're going to get into some of the math of that. But just like when I say you finance every single thing that you buy, the noise says what, Nick? It says, well, there's nothing you can do about that. I mean, that's okay. So what?
It's just the
I mean,
game. It's the way the game's played.
it's just the way
I'm a
it
pawn
is.
in it, right?
Yeah, it is what it is. Right now, I'm all about acceptance when acceptance is ready or necessary. But that's not a truth. That's not a position that you have to have. Okay, banks would never have that position. Banks would never go, well, just like people are just leaving their money here, just like we're not, I mean, a bank would never do that. So what makes us so unconfident in ourselves, or such a financial slave, that we go, well, that's just the way it is? Because we don't understand, right? We don't have
Ignorance.
the knowledge. It's ignorance. That's right. Remember that knowledge does not equal understanding. So in this episode, I want you to have the knowledge necessary, but also the understanding of how to overcome it.
Yeah, I love that. So
All right. Yeah, go ahead.
just remember, don't feel bad for not knowing this stuff, right? Like the financial institutions are spending billions to keep you ignorant. Okay.
Yeah.
So many people don't even realize there's a problem because these financial institutions are playing a game so well, you don't even know there's a game being played.
Absolutely. And Nick, this is a time to remind people the things that we're going to go over today, it's just math. Okay. It's not our opinion. It's just numbers. And so we're going to use a payment calculator for the first calculation. Okay. And we're going to say, I lived in South Dakota and Iowa, South Dakota. You could still today buy a house for $300,000, right? In Louisville, Kentucky, you can buy a house for $300,000.
Yep.
So we're going to use, because I mean, if you are living in a $3 million house, then just add a zero. Okay. So, So let's take a $300,000 house that we're going to go buy. That's what our mortgage is going to be. Forget about what we're putting down. It doesn't matter. And we're going to pay that mortgage off over 360 months, 30 years.
Yep.
Okay. Normal 30-year mortgage, right? And we're going to say 5%. Okay. Don't worry that you can't get a 5% loan. 2 years ago, people are telling us that number was way too high. So it's just, look, we use round numbers to make stuff easy.
Yep.
Okay, so if you had a $300,000 mortgage for 30 years, 360-month amortization, 5%, your payment would be $1,610.46.
Okay.
All right. And that sounds pretty good, right? And that's what they're going to tell you. Hey, you got a 5%. Man, that's lower than the going rate right now. But if I take that $1,610 and I pay it for 360 months, I pay in $579,767. Just call it $580, right?
Yeah. All right.
Okay, so Nick, that means that for 30 years, that 48% of that, every dollar that I pay goes to the bank's benefit or interest, their best interest, right? And 52 cents goes to my benefit. Okay, so wait a minute. You earn $1. You got to give me 48 cents, or I'm sorry, you got to give me 48 cents and you get to keep 52 cents over 30 years. 30 years. Do you care what your interest rate is?
No.
If I said, hey, I'm going to lower that to 4%, now only 47.5% of everything you pay me. I mean, would you go, oh, well, I feel a lot better about that. Look at my interest rate. I'm getting 4. That's way below market.
And you'd convert that for me for free too, right? Like,
absolutely, I would convert that because, and you don't understand. This is coming again, right? This is coming again. The banks are smart. You're going to get all these people loans at 5, 6, 7%. Interest rates are going to drop. Then they're going to come to you and say, Nick, you know what? You've been a great customer of the bank. We'd love to offer you 4% on this loan now. And you say, 4%, man, that's good. I was paying 6. And look, you don't have to put any money in it, Nick. We're just going to go ahead and you've already been approved. We're just going to start this amortization over again. You've been in it for 5 years. Now, why would they do that, Nick?
Because they know something we don't.
They know that in the first 5 years, 85% goes to their benefit and 15% goes to your benefit. They're not happy with the 48% going to their benefit, 48% volume of interest. They want 85 or better.
Sure.
They're greedy, right? They're evil. And so, not because the people are evil, because the system is evil. Yeah. So think about that, Nick. Every 5 years, you either upgrade your house, you get a lower interest rate, you want to take some money out, you want to do anything that you want to do to benefit you.
Right.
And who does it benefit?
Actually, benefits them.
Yeah, because they're going to come to you and say, hey, instead of having $1,610 a month, Nick, your new payment's $1,500.
Gosh, that $100, that's so awesome.
That sounds so good. I'm such a good person that I'm helping you out like this. And so they refinance you every 5 to 7 years. It's one of the reasons that when they'll do a 5 year adjustable rate or a 7 year adjustable rate, they'll give you a lower rate for that, right? A lower rate that means nothing, because then they got you every 5 to 7 years. They'll amortize it over 30 years, no problem. But a 30-year fixed costs you more money. And they still, you know what? The reason it doesn't cost you a lot more money is they know you're going to upgrade, or you're going to want to move, or you're going to, like, the majority of the people, it's like the insurance companies with actuaries. They have all of the data on this. Like you said, they're playing a game and they know this game so much better than you don't even realize they're playing.
Right. Right. Yeah. I always chuckle. I'll ask someone, I'm like, hey, the 15-year mortgage is a little bit cheaper on the rate side. Is that than the 30? Is that for the bank's benefit or your benefit?
Right.
People have never thought about it. Well, of course, it's for the bank's benefit. They know they actually want the principal back faster, right? Because they know what to do. So what do they do with that $16.10 every month?
Yeah, they loan it back out.
So how's that math work out?
Okay, so remember, now we're just using a calculator. You could use any free calculator that you wanted to. The first one that we used was a payment calculator. 300,000, 5%, 360 months, 1610.46, right?
Yep.
Then we used a future value calculator. We said if we pay that 1610.46 every month for 360 months, how much do we actually pay? That's the 580,000. So now we're going to take it one more time. Okay. So we're going to say we're paying that $1,610 and we're going to loan it out one more time. Okay. So that means payment number one, $1,610 comes in. They pool it with a bunch of other people's money and they loan it out one more time.
Every month.
Same every month for 360 months, the same terms. 360 month amortization, 30 years, 5%, just loaning it out one more time. Now they're not going to do this, but if they only loaned it out one more time, guess what they're going to earn in that 30 years on that $300,000 mortgage?
Got to be in the millions, right?
1.3 million, a little bit over 1.3 million, $1,340,323. Now, so you take out a mortgage, the bank, acting like a bank does, controlling the money, controlling the flow, creating velocity of money, they make $1 million on that. And we're not even talking about fractional reserve banking yet. And you laugh, you have to laugh.
That's right.
You have to laugh because, wait a minute, could I do this? Could I do something similar? Because, Nick, this is happening every day. And remember what Nelson said, if you know what's happening, you'll know what to do. The only solution to this is you got to control this.
So, Jim, we used to walk into this and I remember you talking about Samuel L. Jackson and Jennifer Garner, Capital One. This was in the early days of me going, holy cow, that's what's going on around us. And you did this example with, I believe it was at 18%. I mean, with the credit card companies and then all of a sudden I was like, oh, that's why they're on in prime time all the time, right?
All the time.
Monday Night Football, like that's not cheap advertising, right?
Yeah, we can afford the Super Bowl.
Yeah. So if you're wondering, just think about all that money that's flowing out of your hands to their hands. That volume is what really matters.
It's the volume of interest. And, so think about this too. All right. Let's just look at our earnings. This is what we're told. This is what you were taught. Remember, we say everything that you've been taught about money is wrong. And I'm going to prove it to you. Okay. You earn $1. Okay. And what are you told to do with that dollar?
Put it in a good growth stock mutual plan, right?
And what percentage are you supposed to save?
10%.
10%. Okay. So you earn $1 and you have a mortgage. So out of that dollar that you're paying, 48 cents is going to go to the bank's benefit.
Yeah.
52 cents is going to go to your benefit, and you're going to save 10%. Now, the average American, volume-wise, pays what percentage of their net income to interest?
What, 34.5 cents?
34.5 cents. All right. So this is where people like, when we're out on the golf course and somebody says, Nick, what do you do? And you say, I free slaves. And they go, that's really funny. All right.
What do you mean?
I'm not laughing. It's funny that people will put up with it. But listen, so you earn $1, Nick. You got to give me 34.5 cents and you get to keep 10 to save. What does that make you?
A slave.
A slave. Because if you were my slave, okay, and you earn $1, whose dollar is it?
It's really yours.
It's mine. It's not yours. You own nothing. So if you earn $1, you got to give 34.5 cents to the banks. Whose slave are you?
The
banks. Okay. If that doesn't motivate you to want to be your own banker, I don't know what will. Right? Now you want to do it. You want to be your own banker. But nobody's going to teach you in the mainstream to be your own banker.
No. I would say, well, because they don't win if you free yourself. The slave owner, they lose.
Right.
And
why would the slave owner ever release the slave if they didn't have to?
Yeah.
They wouldn't.
Yeah.
I'm watching this show. It's a new show on Rome. And I'm really fascinated with Rome and their and the distraction of chariot races, then to gladiators. And what were they distracting? Hey, there's not enough food, right? And so we got to distract you. We want you bloodthirsty for entertainment.
Not questioning.
Now think about this, Nick. This is happening right now today.
Yeah.
And we got to distract you. But then there's the classes, right? And then there's slaves. And all a slave can think is that I want to be free. And all the middle class can think about is, I wish I was middle class, or I wish I was upper class. I wish I was royalty. I wish whatever the classes are. Okay.
Sure.
But the slave, once they know they're a slave, they'll die for freedom.
Sure.
But the middle classes, not so much. Well, got my boat, got my F-150, which I love, by the way, and I got my vacation to Mexico coming up. I'm fine.
Right.
I'm fine. I'm a comfortable slave. And I'm way better off than, I should just be grateful. I'm way better off than so many people out there. But the slave says, wait a minute, I don't want to be a slave. So how do I become free? Well, I got to earn that, right? And so when we talk to people about financial freedom, it's not because you're free already, right? It's because you're not free. But when you have money coming in every month that you don't have to go to work for, then you can focus on the things that are important to you.
And just because you have a lot of money doesn't mean you're free.
Absolutely.
Right.
No,
you can still be a slave to the system, right?
Yep.
And understanding about control. Whoever controls the money makes the rules, right?
Yep.
And so if you're wondering, how do I learn more about this? Just go to community.createtailwind.com, go to your app store, type in Create Tailwind, all one word. It's all free. Go in there, watch What is IBC? Watch the missing pieces. Watch Becoming Your Own Banker. This is here to serve you and to help you free yourself. We're not going to free you, but the tools are all right there. And it's all born out of this brilliant book called Becoming Your Own Banker by Nelson Nash, who just walks through it. If you read it once and go, man, I don't understand all that. Read it again, watch the course. But all of it's there so that you can understand how the game's played and how you too can play the game.
Yeah, we have a course that walks you through almost every page in the book, all the important pages. Nick, I had a conversation with one of our good clients, like I mentioned earlier today.
Yeah.
And he brought up something. He actually got emotional about it.
No doubt.
One of the, because it's changed his life becoming his own banker, right?
Yep.
And he was doing it the traditional way. And it was hard for that paradigm. And if it weren't for the relationship that you have with this individual, he probably never would have changed this paradigm, right?
Yep.
Because it just wouldn't have had that trust. But he mentioned something yesterday that was a great reminder of one of the wealthiest men that I've ever met in my life. And you know who I'm talking about?
No.
This guy had more wealth than you can imagine, and it wasn't in the form of money. It was R. Nelson Nash, because he had this passion.
Yeah.
He had his North Star, which guided him, and everything that he talked about was through the lens of the Bible. And he was the wealthiest person that I think probably I've ever met.
Sure.
And I remember, I told this story in this episode that we recorded, is I remember kind of towards the end of his life, and I know you remember this, but he sent out like this kind of a breakdown of his money and properties and stuff. He said, I just want you to know I'm fine. I got plenty of money. Again, money does not create or does not equal wealth. What Nelson had was this passion to teach people.
Yeah.
And this servant's heart to share the truth.
Yeah.
And that made him wealthier beyond any dollar amount that he ever could have had. Yeah. And I always thought, early on, again, you got to remember, I have this growing up core. I still have this thing that I'll slide back into. It's about the money, right?
Yep.
And I'd say, man, Nelson could have monetized this for millions and millions and millions of hundreds of millions of dollars. And he didn't. And it was like, why didn't he do that? Because he knew that's not where the wealth resided, that wasn't what it was about. Like, he had everything he wanted.
Sure. He
was content in his heart. He knew that when he got to heaven, God would say, well done, faithful servant, right? And that made him wealthy beyond belief. So yeah. I just wanted to share that at the end there to, we talk about these concepts and we're talking about money, right? Because money gives you choices. Choices give you freedom. So what are we really talking about?
Freedom.
Wealth is freedom, right? Control is freedom. And you can do it. So anyway, sorry, I'm rattling on. Maybe too much.
No, let's wrap it up with thank you for listening. Free yourself. Dive in, learn. And Jim, send us out.
We're going to send it out like we always do with the incredible words of Earl Nightingale and the strangest secret. And you know what? The more you listen to it, it's not so strange. So take it away, Earl.
Here's the key to success and the key to failure. We become what we think about. Now let me say that again. We become what we think about.
Thanks for listening to the Breakaway Wealth Podcast. Be sure to subscribe to this show wherever you're listening so you never miss an episode. If you want to start increasing your wealth building ability right now, go to community.createtailwind.com to join our free online community and get access to free, in-depth training designed to help you build real, lasting wealth. See you next week.